this morning. Joining us right now on oil is Carl Larry. He's the Director of Energy Derivatives and Research at Blue Ocean Brokerage. Also joining us on precious metals today is Tom O'Brien. He's the editor of the Gold Report. And, gentlemen, you take a look at what's been happening with commodities, and there are a lot of people who are pretty shaken up. Carl, what's the direction going to be with oil prices, and how much of this is reliant just on that dollar-euro trade?
Well, as far as the direction goes, we'll have to flip a coin and say today's Friday, we'll go with up. Tomorrow it could be, or I should say Monday, it could be down, and it's just flip-flopping around here. It's trying to find a direction, but the volatility has been so high. I think right now we're looking at a lot of fund managers pushing money in, taking money out, trying to rebalance and finding a way, to use this as an asset class, as growth and economic growth around the world.
Fair to say that the momentum trade is completely gone, though?
Well, I mean, again, for this week, as soon as we start seeing fundamentals play back into the market, we start seeing supply and demand figures, we'll start moving back up. And,
I don't know. A lot of people say it's the supply demand that's brought it to this level. We got those numbers from the EIA. We saw gasoline supplies that were much stronger than expected. They say that has played a real role in this, too.
Yeah, and it's about prices. I mean, if we stay around the $100 level and we can kind of, move up a little bit here, move down a little bit here, we're going to be okay. $100 is fair value right now for the market, and I think it's just a matter of getting people confident in that right now. But it's true. When you get 114, it's too high. We get $90, it's too low. So, we'll find that direction soon enough, as soon as we get a little bit calmer markets.
Carl, one more quick question before we go over to Tom and talk gold, and that is Rex Tillerson, the CEO of Exxon, the other day came out and said the marginal cost of getting another barrel out of the ground was $60, $70. Really true that 50% of the price is speculation?
Oh, I mean, you can see the way it's gone right now. And we've seen some numbers this week where a lot of hedgers, big oil companies and gas companies, have lost a lot of that on hedging. And that's the truth. That's the truth to it. I mean, with the volatility in the markets, it's hard to find a good place to place your hedge. $80 used to be the key number. Now we're looking at $100, but that hasn't worked out so well either. So definitely speculation plays a big part in that oil price.
Hey, Tom, what about gold prices? I mean, gold prices and silver in combination. Silver's been the huge story over the last week and a half or so. Which of these plays do you think is a safe one right now? And do you have any better sense of a change in volatility, especially for silver?
When you look at the whole commodity complex, Becky, what you have is that it's all about the U.S. dollar. Silver went parabolic, it crashed. Gold hasn't done that, so I suspect that gold will pull back. But, if you go back the last 10 years, the dollar index is at 121, goes down to 70. We actually hit the bottom 2 years ago. We've come off that bottom twice. And going against the euro, going against the yen, the dollar's gone to 89. It doesn't matter whether we talk gold, silver, corn, wheat, oil. The dollar wants to go to 89. Now, as soon as the dollar moves higher, the market absolutely does conniptions. You had the CEO of Caterpillar on yesterday. 95% of his business is overseas. So this brings in the industrials also. It brings everything back. The dollar wants to go higher. Gold is held up. I suspect gold wants to pull back. The margins, come into that for sure. You can still trade gold at a 4% margin. But the story to me, is the dollar. When people say the euro wants to go higher, hey, the euro, you have 4 countries going bankrupt, right? Forget it. In the United States, we have states in trouble. But what happens with our states in trouble is that first we have the U.S. government bringing money into it. Then if that doesn't work, then we get the federal government giving the U.S. government money, putting money into it. We're in better shape. We're in better shape than and the dollar wants to go up. And that's what's running the commodity markets. That's what has been running the market since 2000. And that's going to be the hardest part for everyone to really understand, because as that dollar gets higher, the markets will take a hit. Then, a year from now, year and a half from now, the markets will get used to it. But right now, that dollar runs the whole ball of wax.
Yeah, I have to agree with you on that, Tom. I should point out that the Caterpillar CEO, when he was on a couple of days ago, said, I got confused by that, too. He said 95% of his potential customers were outside the United States. I got completely confused and twisted around by that, too, and it took me about 10 minutes to figure out what he had actually said.
But revenue is Well over half.
Yeah,
yes.
well over half.
Overseas,
But he did say that 95% of his potential customers are overseas when you start looking at the growth around the world, and I think that's what he was pointing out.
And it's big money selling overseas, bringing that dollar back.
Right.
When the dollar's going down, that's huge profits. When you look at those balance sheets.
He also said he'd like to see a more neutral dollar. I mean, at least in terms of how quickly the changes happen, that volatility doesn't help any of the international players either.
No, well, they have to say that. They have to. The last thing they want to come out and say they want a weak dollar. No one can say that.
Right. Tom, the other issue has got to be, though, those margin requirements that have changed, especially when it comes to silver. That has certainly added to the volatility.
Well, that's an immediate loss for traders. Bottom line, you put one contract on at 14,500. They scale up. You put another on, let's say 35. You put one on 40. You put one on 45. When they went up to 22,500. The trader had 3 contracts, 15,000 profit. They woke up in the morning and they were underwater. That wipes the market out every time. In the future market, I trade futures a lot. Mm-hmm. That's an immediate wipeout ASAP. But silver was parabolic. No two ways about that.
Mm-hmm. Tom, you used to hear that gold tracked, the political situation, and it was a hedge in terms of instability. Not so much this dollar trend that you're talking about that everyone acknowledges now. But have you gone back and looked historically at how gold's tracked the dollar? I mean, it seems to be sort of a newer phenomenon.
You hear it the last 6 months a year. It's tracked it tick for tick since 2000.
But I'm just wondering, going all the way back to 80s, 90s, and all those kinds of things. The
80s and 90s, it only became legal, and it went parabolic, just like silver. You go parabolic, it was dead for 20 years. When we're talking gold, we're only talking a lifespan here of about 25, 30 years. So to me, what it is that the dollar will go higher now. Gold wants to go lower, bringing the commodities lower. And this is where it's amazing, because for a country, it's 10 times better. Now, the short-term pain is going to be a lot more, though, because when the dollar goes higher, the larger corporations are going to have to get used to it. So we'll see how it shakes out. But I suspect 2 or 3 years from now, it'll be fine.
All right. Tom, Carl, gentlemen, thank you very much for joining us. And
have a great one. Have a safe
good
one.
weekend to both of you. Thanks.